Lots of economists are predicting a recession. Most CEOs are expecting a recession within the next year. I'm in that camp as well. What's it mean? What are some facts about recessions to help you prepare for what we're experiencing right now or what we're about to go through? I've got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Recession's not just a buzzword. It might be a reality, guys. Many economists are now expecting I think it's 44% chance of a recession within the next 12 months. I think the 60% of CEOs are expecting a recession in the next 12 months, and that means 40% are coward and they just aren't going to say it. I mean, it just looks like it. It feels like it. I hope I'm wrong. There's a very good chance I am wrong, but it certainly feels like we're on the cusp of a recession, or we'll likely see one in the next 12 months. By the time you're watching this, we might be receiving the second quarter GDP news, and it might surprise and be negative, and we might be in a very shallow recession that could get deeper. We'll see. What's it mean? And what are some facts about recessions? How do they work so that you can help navigate this time period, okay? Well, the first one, recession's not just a feeling, it actually has an objective definition. Now, the National Bureau of Economic Research is the actual body that says, it's official, we're in one or we're not, whatever. But the quick and dirty objective way, and to me, this is like the only definition that you can really rely upon, is 2 consecutive quarters where GDP, the overall economic activity, has shrunk, has contracted, has been negative. Now, the National Bureau of Economic Research, the folks over there, they look at a few other things. They look at overall employment and a few other signs, inflation adjusted, manufacturing, sales and trade, all that sort of stuff. But that's a lot of economic data and jargon that most of us don't have access to or can't read properly. So in my opinion, the recession, yes, it's a time when employers are cutting jobs. Yes, it's a time when retail sales decline, manufacturing goes down. Yes, it's accompanied by job losses and the unemployment rate going higher. All those things, all those feelings, yes, but it's an objective. There's an objective definition. People debate this all the time. I enjoy listening to it because I'm a geek. But the objective definition, 2 consecutive quarters where GDP has contracted, economic activity has contracted, 2 consecutive quarters of negative GDP. So here's the thing. You can't know that we're in a recession until we've been in one for 7 months. You can't. Why? Because it's got to be 6 straight months, like 2 straight quarters of contracting GDP, but then you don't even get the data. The data is not even released until a month after the quarter end. So you don't know that we've been in a recession until we've been in one for 7 months. Second fact about recessions, and I mean, my brain's just going there right now, and guys, they happen pretty frequently, okay? Going back to 1857, a recession has occurred on average about every 3 years, 3 1/4, okay? 3 years plus a quarter. Now, going back all that way, we didn't have the financial infrastructure that we have now. And, you know, on one side, you can say, well, that financial infrastructure, the Fed, everything, that does help things be more stable. So we hopefully are seeing fewer recessions. At the same time, they're causing some, and they're tinkering with the overall system, and it's not a free market really anymore, and therefore they could be more severe. I think both of those are true. Since let's see, World War II, on average, it's about every 5 years, okay? You smooth that all out, it's about every 4 years is what I tell people. About every 4 years, we're going to see a recession. Now, interestingly enough, we saw one in 08, 09. We didn't see one technically again until 2020, and that one was a fluke. We were expecting it, by the way. Many economists said, yeah, we're well overdue, but guys, that's 12 years where they normally happen every 4 to 5. So if we do see another one in 2020, that might be more normal, even though it's coming very quickly on the heels of the one that we saw in 2020. One in 2022, one in 2020. That certainly doesn't meet that but we should expect a recession every 4, maybe 5 years. Big question here, how long do recessions typically last? If you go all the way back, go back to 1857, just under 18 months. Okay, is typical, and I would still say that's probably what you should set your expectations at. If we look since World War II, though, it's actually about 11 months. Actually about 11. So call it a year, year and a half. And this is good perspective, because if it rained yesterday and it rains today and the forecast says it's going to rain tomorrow, you might start thinking it will never stop raining. If the stock market goes down this month and goes down next month and was down last month, you might think stocks will only go down from here on out. Recessions don't last forever. They can be severe, and obviously they vary on severity, but they don't last forever, okay? And 12 months, you can endure just about anything if you're prepared for 12 months. That's not an eternity. It might feel like it, and it's extremely painful, okay? And there's big financial consequences, not just to your portfolio, maybe in your job security, your cash flow. I'm not minimizing it at all. In fact, just the opposite. But I am pointing out that on average, 12, maybe 18 months is typically how long they last. Now, the recovery then doesn't immediately go back to where it was. That takes some time as well. Overall, I would expect maybe 36 months between the decline and then the recovery is fairly typical. Maybe 24 months, something like that. How do you know when a recession is going to occur? Is there an early warning sign? Well, the very interesting thing is there isn't. There's not a great indicator of a recession, except in one instance. And the tricky thing is it's always darkest before dawn, but the opposite is true as well, in fact, right? It's always brightest right before it starts getting darker. And so oftentimes you'll start getting some signals, some warning signs. We could be seeing a slowdown without knowing for sure, well, okay, wait, is this a recession or is this just a natural sort of contracting here? The early warning sign that's been the best indicator has been the inverted yield curve. Now, that is really, really geeky for the explanation being when short-term interest rates are higher than long-term interest rates. Basically, when the Federal Reserve in the open market is trying to push interest rates higher in the short term because things have gotten a little bit too hot, but people in the open market still expect over the long term that growth rates really aren't going to be that high. So interest rates in the short term exceed those in the long term. Take a look at this chart that overlays the 2-year interest rate compared to the 10-year interest rate. And when it goes negative, when it inverts, compared to those gray areas, those recessions, this is going back 50 years almost. It has preceded, an inverted yield curve has preceded every recession going back 50 years. Now, there are times when it inverts and then it recovers, so you can't just look at this and say, when that happens, that's when I'm going to sell stocks or that's when I'm going to get super prepared. But you could use it as a pretty confident indicator that when this happens, we might see some storm clouds. So hunker down and make sure that you're prepared for a recession should it come. And then lastly, the last truth that I would point out about a recession is comparing a recession, which is the economy, with the stock market, which is a leading indicator of the economy. They're connected, but they're not the same thing. The stock market tends to move before the economy. The stock market will start to anticipate a recession, start going down before we officially hear we're in a recession. Conversely, and there's no perfect timing of this, but when, historically speaking, is a great time to be investing during a recession, as soon as it's declared. Like I said, typically a recession is declared 7 months into one. That's usually a great time to start buying because the stock market's going to bottom and start moving higher before we're officially out of a recession, before it's really been announced that we're out of a recession. By the time it's announced we're out of a recession, it's and I'm not going to say too late, but the stock market has already bottomed and surged significantly higher. You've missed a lot of upside. So the fifth truth about recessions, it's different the timing is different than the stock market. The stock market is a leading indicator of the economy. The stock market's going to move before the economy, and therefore stock market will start declining before you know we're officially in a recession. Stock market will start advancing even while we're still going through a recession before we've been declared that we're out of it, okay? So based on data, work with your CFP, but based on data, once a recession is declared, traditionally, that's been a great time to start buying again or continue, have more confidence as you're buying more shares and getting aggressive. Big idea. Are we on track? Are we going to see a recession in the near term? Lots of professionals are expecting it. Make sure that you're prepared, and hopefully these facts about how recessions work equip you, even if it's just having the right perspective, so that you can make great decisions if and when we see that next recession. Hopefully that helps. Work with your certified financial planner. Make sure that you're doing the right things. Make sure that you're properly prepared. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.